All right, let's jump into it. Do a bit of a sort of weekend review. What are we at? 20 past 10 on the 22nd. 22 past 22 on the 22nd. All right, so look, let's jump into it. Sort of start off with gold here because I mean, obviously anybody that's been paying attention to the sort of gold market knows that this is continuing to punch out all new highs, and of course we were through this sort of consolidation period for I think pretty much about the better part of a month. So I've got August 20th, and then we broke out on the 12th, so 3 weeks or so at least. Really just sort of building up a bit of sort of liquidity, really just poised, ready to sort of see if we were actually going to see, excuse me, that sort of continuation. Because just a little recap of where we were at, we had that sort of larger sort of consolidation period, sort of going through, and these swings, remember, they were like 150, 120 buck swings or so, and they really. Let's move this back in. I'm not quite sure what I had this one marked out for, but oh, that's right. Anyway, just from the other day. But yeah, so this was sort of quite a large area that we were sort of playing around with. We got the breakout, the back test, and then tried to go through, and obviously just boom, didn't go through, and we sort of sat there for a while. But what this did give us was a sort of a good range that we could work those sort of measured move price targets off. And obviously, once we did finally get that breakout the other week, I mean, we've gone back 2 weeks now with that breakout, where the ECB, I think there was the ECB that cut. I think that was the sort of catalyst that got it sort of grinding and moving out the top out here. We saw that first price target taken out, and we knew that sort of like the price target for this move was to the equal size of that range that we were in. So that was price target one. We saw the market sell off after this. That's fine. Came back through here, but this is the point that's kind of important because we're still seeing the buyers pushing up and pushing up. Like, of course, we're at all-time highs and that, and it's a bit hard to sort of really pick where you're going to be sort of calling your levels and that when you're up here because you haven't got any historical data to sort of work it off. So measured moves is what you really need to sort of be looking for. And the second measured move gives us this price target 2600. It's also that big round number. We could see we clipped into it and market bang sold it off down there again. So these kind of things here, we've hit a price target, we've hit the second price target, and this sell you can see here is like quite a long wick on there. So the market very quickly got rid of that, and that was after the rate cut. But despite all these sort of things here, they're still buying it up and they're still pushing it higher and higher and higher. And we've actually sort of closed the week out, of course, on all-time highs, but $2 or $3 off really the high. There's not really much sort of selling going on here at all. So, my sort of thought was that 2630 would have been probably a reasonable next level, just given this sort of rising sort of resistance that we've sort of had. We've got sort of 1, 2, so this would be our sort of third touch up, and it's looking like this is most likely going to get a hit. Now, it doesn't mean that this is going to be the move that like that's it and we hit that and then it turns around or anything. It's just that you can most likely expect a little bit of a reaction once you do come into contact with this point up over here. I have heard calls, as I said a few times, of 2650. I don't see how they would have got these. I'm not saying that they're not happening. I just can't sort of see anywhere apart from the fact of 2650 kind of being a bit of a round number as well, that this would be your level that you're looking for. So I'm working off the idea that we've still got a little bit of upside coming through here. Let's bang these out here. So this will be your first touch. We've got our second touch here, and then again, as I've got this price target written up over here, 2630, that this would most likely be our next level here. So what I'll probably be looking for here is maybe a little bit of a push early in Asia. See how the market reacts around here. Look, it could ignore it entirely, and it could push through a little bit higher as well. But I'll get to DXY because obviously that sort of weighs in on this at the moment, and I think that's a bit of a factor. But what I'm sort of expecting is possibly a little bit of a push up early, get some sort of picking up on the last peak, get some sort of reaction up over here, and then sort of see some sort of pushback down to, I think 26, even though, we didn't have, I suppose we had this wick high over here. This is an area in which I'd be looking to sort of then potentially see some buying, step back in, and then as to whether you go sort of lower high, 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 or double top. Well, that sort of remains to be seen, but I think we sort of like can expect a little bit of cooling in the early part of the week after a little bit of an early sort of push up. But again, if you follow this sort of line here with the buys, you can see the buys aren't sort of waiting really. They're pushing up, they're pushing up, pushing up, and this is where I'd be sort of looking potentially to sort of be seeing a little bit of buying opportunity. So 26.21 at the moment. We did hit 26.26. I would expect, and I'd like to sort of actually, I've closed all my gold at the moment, but I'd like to sort of get long around that sort of 2600 level to sort of see if we can then use that to then maybe sort of shoot on a little bit higher, or at least play this sort of top half of the range over here. So yeah, that's interesting with gold because I mean it's really just it continues to punch out higher highs, and I mean this is the whole sort of thing that I say 90% of the time it'll run inverse to DXY. Of course, you get those times, 10% of the time, and that it will run sort of concurrently with it, like they'll both be going up or they'll both be going down. But generally, you sort of see these things, and at the moment, obviously, so US dollar being under a lot of pressure recently, this has just paved the way for people to be looking where to sort of see those money flows, and obviously, gold and metals seem to be a pretty sort of decent place for them to sort of park it. So yeah, I won't be sort of jumping in too early. I don't think with gold come the new week. I'll flip across to DXY because obviously this is the one, this is the balancing act with it all. And, you know, as a whole, yes, it's been selling down. It's been selling down for, you know, the last few months or so, based on the idea that, you know, Fed's cutting, that's it. We had that happen this week. You know, they cut 50 basis point. As I said, I was thinking 25 basis point, 50 basis point was the case. It dropped right down here, put in new lows, fresh lows. Since we haven't been at this level since July last year. So, you know, 15, what's that, 15 months or so, 14 months. But of course, as the market does in its typical sort of fashion, you know, buy the rumor, sell the news kind of thing. And we saw a very quick, sharp bounce back up over here. But, you know, it came into contact with this sort of yearly open level that we had sort of marked out. And obviously the market's just like, okay, bang, that's enough for us now. Let's push it back down. So it is still under pressure. But I think the big takeaway with this at the moment is the fact that it hasn't broken down. It did break down for a second, but obviously we saw whatever it was, either people taking profits, short squeezing, or you know just trying to sort of get long for a bit of it, maybe a short term, medium term, or maybe even they're looking a longer term sort of play from down in these levels here. But whatever it was, the sellers were unable to, despite a 50 base point cut by the Fed, actually sort of really commit and hold this candle or any of these candles, because as you can see, it's come under a couple of times to be able to sort of really sort of close it down and move to these lower price targets on DXY. And I think this is something that needs to be noted because yes, we've been selling down. Yes, we knew the cuts were coming and the cuts were bigger than sort of, you know, the market had been pricing. But even though with all that stuff lining up and gold pushing to all new all-time highs, you're still not seeing it break down yet. And there's only so many times that it'll push at this level. And if it can't break it, people are going to de-risk and they're going to go, okay, well, you know, whether, again, it'll be the same sort of thing, whether people are sort of like, you know, covering some sort of short positions, which obviously is buying. You've got people actually going, you know what, let's buy it, maybe because every time it comes down here, obviously people are buying it up or people are closing their shorts, whatever it may be. This level is holding. So it's a very strong sort of line in the sand for it, I would say, in the short term. I think if you do happen to get the close down under here, I think that'll be the signal that, okay, yes, we come down. We've got two price targets sort of measured out here. And that's where we'd be sort of looking for the market to move down before possibly finding another round of buying. But if it continues to push down this side over here and it can't actually get through, you're going to see a bit of a reversal back up the other way. Because remember, a breakout is fine. You know, everyone, you know, you can sort of trade the breakout. But a failure to break out is also just as good a signal because it's pretty much a reversal signal. It's just sort of saying that, look, we've tried. Let's see what happens if we get back up here and then we can try and push down again. So if we do get a break, look, it's a bit hard because obviously, you know, we've got so much a chop going through this area here, but little levels that we could expect to sort of see and use as sort of like a bit more of a sort of a confirmation of one direction or the other. I would expand this little box out here now. I put this down to the bottom, and for me, I'm going to be looking for a close outside this box here. I think the possibility right now does come that we may be seeing some US dollar buying based on the fact that we were waiting for all this news. It came, and even despite that, it was unable to close underneath. I think you're going to see the market sort of revert back a little bit with that. So it's going to put pressure on a couple of the crosses with it and potentially see a little bit of a cooling off with the metals as well. So it doesn't mean that obviously we're going to get a breakout or it's moving back up to the top, because you got to think DXY on a larger scale, it's still in this range down the bottom here. Like, this is all very well to put this little smaller consolidation box here, but realistically, that's your main breakout box. If the Bulls want to sort of try and actually sort of squeeze it, or if they want to push it harder, they need to get above 102, say 102.15, 102.20. This is the level we saw some buying. We know that it's, if we go back over here, it's quite a historical level where the market had sort of valued it. This is early January. You can see that obviously it tried to hold it on the way down, and it's provided a pretty good resistance so far since it's been to the bottom side of it all. So once it sort of can get out of this box, I think we could see some more medium-term direction. The problem with sort of anybody trying to get long on this is that, one, as we said, look, you've got the cuts coming down in FOMC. So, that is always going to add a little bit of pressure to it. But you got to think this whole move through here is pretty much that. It's not just the last sort of couple of days while we actually saw the cut. The market was pricing it in. Them selling down all the way through here is them positioning for it, pricing it in to the market. So has that move already fully been priced in down here? And this is why I say that if it has a sort of failure, despite this kind of news, to them actually break out or break down in this sort of sense, it really opens it up to the idea that you might get a little bit of a push, or a little bit of a medium squeeze up to the top side over here. Let's fix this one here. That's your bigger box there. So I think that if it does decide to come up to the top side here, you've got this falling resistance, which it's been respecting this whole way down. Well, it hasn't for a while. This also does line up with these previous highs through here, which could give you a little bit of a resistance level through here as well. So I would say even if they do get a bit of a push, I think it's still somewhat going to be limited. I don't think we're about to sort of get back up above 102, 103. But again, look, anything can happen. You just have to trade what the price action will show you at the time. So if we get a break above this level here, you got to think, okay, here's your consolidation box. It's broken out of that. It's broken out to the top side. Here's your falling resistance. It's broken out above that. And here's a very strong historical horizontal, and it's broken above that. So those three signals together mean that, most likely the market's going to see a little bit of a drive, and I'd be looking up at least around the sort of 103 to 103.50 mark. Given that, I would even probably push this up over here now. I would be happy to sort of make this. It's a fairly big range because obviously we've got some selling happening over here. But, through this range, you've got a measured move that sort of takes you up to the top level here. This was the very top of these wicks and the selling pressure that we saw on the way down in August. And I could expect to sort of see some sort of move to this sort of effect up over here, then to hit that price target, and then to potentially sort of come back down here. But again, look, you can't get to these levels before you've broken these early ones here. So first things first is this smaller box between 101.10 and between 150. Break above that, we know where our targets will be. We know sort of where we can expect to see some reaction, which will be this level over here. And then, of course, if we break above that, well, you've still got this to sort of contend with. And then moving up, we've obviously got our price target back up over here with our measured moves as well. So I'll pretty much sort of be waiting to sort of see what we do here. Let's put move this down a little bit here. I'll put this one. I'm quite sure this open-ended. You know what? We've seen this function before. It's 27th, whatever. Cool. So yeah, I think it does sort of give a plausible chance that, as I said, if we get above this sort of short-term resistance here, that we could see a little bit of a recovery over here. Again, it doesn't mean that DXY is going to be going all the way back up to the top. We've got the other levels and the other sort of confirmation parts that we can see, but it means that most likely we'll see a continued push and drive up to these levels, and then depending on what you're trading, if you're trading gold, trading Aussie in my case, copper, these kind of things, silver, you can be looking for your buys as it pushes into this level here, because this is where you're going to see the market go, okay, yep, that's enough. Let's start selling US dollars again. They'll start selling US dollars, and you'll see these other, corresponding pairs or commodities and that sort of start to drive up a little bit as well. However, as I said, if we get the close down underneath 140 or this thereabouts, like a closed 4 hour at least, if not more, down to this bottom side here, again, we know where the price targets are. So we're going to be holding those sort of positions through to hit the price targets, and then we'll sort of start to take bits and pieces off as we sort of move down towards our targets. So it really is, it's one of those things that could go both ways. I mean, that's a bit of a, kind of sort of flop answer in that. Yeah, it could go both ways, but that's the thing. At the moment, it's still very much in a bearish momentum, but the fact that it hasn't broken out on after so many attempts down here means that that needs to be recognized. And if it does get above this level here, then we'll see a more sort of short-term push to the top side. Um, okay, flip across. We've got Aussie, and Aussie's holding up okay. It did obviously sort of break out to the top side over here, and it's really just sort of consolidating the highs. We'll clean this up a little bit because it's starting to get a little bit messy up around here. So if we sort of drag these up a little bit, we can see what we might be sort of seeing with Aussie through here. Maybe something to this. I'm not a big fan of this level here. Actually, no, I'm going to take that out. That doesn't seem to count with anything. I would say, actually, let's get rid of that. I would just sort of say, look, it's in a little bit of a consolidation box as well. I think sort of we've got the RBA coming this week. Pretty much expectations are it's going to be a hold. We just don't have the data to support a cut. As much as sort of people sort of like, you watch it on the news and like people sort of be going, oh, yeah, surely it's a time for a cut. But, again, I say this every time. It's sort of like the market doesn't care about feelings. Like, they're there to sort of like do a job. And if you've got inflation still 1.5, 1.75 past like times your target, you've got jobs being added at 2 times expectations each month. These aren't the sort of macro things that you're looking for to go, yeah, okay, now we need to do something and cut the market. Like the housing market it will just explode. It's already running incredibly hot. But what happens if they sort of cut rates now? You know what I mean? All these people start thinking, oh, great, it's over. Because, like I said, like you put it on the news and people go, oh, surely it's time for a cut. 90% of people don't understand what's going on. And they just sort of say, okay, well, I've got to pay this much per month. And if it's down, okay, then I've got to pay that much. They don't sort of think past what their actual involvement with it is. And so sort of like basically if they cut rates now, people will go, okay, yeah, wow, it's over. Let's jump back straight on it. People start borrowing again. They'll start borrowing more. And what's going to happen to the housing market? It's just going to get even worse. So I think that's got to weigh into the factors at the moment. And as I said, it's sort of like, we're not seeing any other data. I mean, GDP was a little bit weak, yes, but we're not seeing sort of jobs, like sort of employment rates sort of really sort of coming down or going up, sorry. And unemployment rates going up. And we're also still seeing a lot of jobs being added. Again, look, it's the same stuff that I repeat is that, it's sort of like if companies are worried about their future and they need a little bit of help, they're generally going to sort of be bunkering down, working with what they've got. They're going to be sort of like reducing hours, reducing jobs. They're not going to go on a hiring spree if they're sort of worried about whether they're going to be able to pay the bills next month and keep the lights on. It just doesn't work like that. So I reckon most likely we're going to see another hold, but I think sort of, again, it's still going to have that hawkish tone to it. And that will keep Aussie still somewhat elevated. I don't think till we sort of hear Bullock go, yep, look, things are definitely on the path and we could almost be expecting a cut pretty soon, until you sort of hear it coming out of her mouth, I think that's still going to keep Aussie in a buy the dips kind of situation. Now, it doesn't mean that we can't see further pullbacks, because obviously we had this pullback coming from here. This is almost 200 points or so. I think it came down from here. Yeah, almost 200 points exactly. But as you can see, it's just pushed right back up. And really, we are at the moment just sort of consolidating the highs. So, I think a break is sort of below sort of, 67.80 above this sort of level here, which we've seen. The buyers have picked it up a couple of times on these little push down, little sell down points. I think if we break that wick down there, so underneath 80, then look, you could be looking back down at potentially, the low 67s and find this, maybe undo this big move that we had come through here, so 67.40s. But I just don't see this necessarily coming all the way back down here. Look, excuse me, if they do fail to sort of break through here, you'll start to see people making calls of double tops and all this kind of stuff. So, I mean, a plausible target could be back down where we sort of saw it at the bounce from like 2 weeks ago, whenever it was, back down in this area over here. And particularly, as I said, if we see DXY get on a bit of a squeeze and a bit of a run, very much so. You could see this be a bit of a larger range start to set up. But again, I just don't think that we're going to sort of be seeing cuts anytime soon. And because of that, I just don't think that we're going to see Aussie really sort of get down below, say, 66, 66, 50, these kind of areas here. I think sort of the worst case for bulls, I suppose, with downside scenario would be for this to sort of range through this period here, so back down to 66, 50s. But again, if you see DXY break down, we've got some little levels just above, which we could very much sort of see Aussie push out to the top two. Look, even the next supports aren't that much lower on DXY. So I would say that if the market decides to sort of like sell it down a little bit, I would say they're still going to be buying it up from those previous lows, or last year's lows actually, in fact they are, that we had marked out. And I think this could sort of put some pressure on Aussie down these periods here. So I think topside moves potentially are only looking up to maybe around sort of 66.80, which were the start of the year highs before a bit of a sort of playback. And alternatively, once we come outside the bottom of this box down here, I would be looking for some buys. I'd have to sort of clean this up as to sort of where we'd be looking a little bit more for this, because this is actually a new high that we put in here. And, maybe back down. Maybe this could actually feel down around the sort of 61%. I would say that'd be about the best we'd be looking for in that if you're trying to sort of get long on lower levels, around 67. But again, at the moment, it's consolidating near the highs, so it's very much a bullish buy kind of mode. I wouldn't be looking to short this at the moment. We'll flip across, go on to silver, because silver, as we sort of made out that little sort of channel to price target last week, it obviously, as you can see through here, it made the effort, it got out, but us again, unable to break and unable to sort of get through that top area there. And we're starting to see this little sort of rising resistance and confluence of this horizontal start to hold it in place. Again, if we see DXY break down, then we'll see this pop out to the top side, and we've got our price targets. 32, 32.20, 32.30, these kind of levels here, which still offers a fairly decent trade if you do get that break. So that break above there is still, 2.5% move to the top side. So still a little bit of a move if you do wait for the break to the top side. But again, it's just consolidating at near highs. So I don't think this is necessarily about to break down. This seems to be a fairly decent sort of rising support that we can sort of be working off. If you break back down below, say 30.50, I'd be looking for a little bit of a deeper pullback over here. And again, these sort of things can all line up. If we do see DXY, and this is why I cover both sides of it, if we see DXY squeeze and actually break and try to run harder, because remember, it just hasn't broken down from this level yet. It's been in this range for, I don't know, a couple of weeks and still unable to sort of break down. If they decide to go, okay, actually let's squeeze it up a bit, you're going to see deeper pullbacks in, as I said, in gold never had the retest of 25.30. I mean, it's almost $100 off that right now. Aussie could definitely sort of come back into that little range. And as we can see here with silver, we could see a little bit of a break and push back down over here as well. But at the moment, this is an area where we sort of picked out where the sellers are going to be. The sellers were there. So there's no real sort of shocker that it's why is it stopping here? We know why it is. We know that the market has valued it here. They're just waiting to see if we're going to see a continued a continued sort of move in that direction with risk and with sort of safe haven, basically USD. That's the main thing they're sort of looking for there. So break above this level here. Look, you got a couple of little wicks to deal with, but really you're coming back into these major highs over here. Look, down the track, I don't think like these things don't go through first time, and that's why we'd have the price target at this level here. We'd wait for it to cool off again and then have another run to sort of push through. But this is going to be a major breakout. Like if you sort of look at this move through here, this is something that it's been respecting, this falling resistance and these highs since going back to well May, so it's not too long ago. But realistically, these are sort of major levels because we haven't seen these levels for, you know, not quite sure how long's this back here in that. So, we're way above these weeks now. So this is back in August in 20, so multiple years. That sort of silver's been up above this level. So if it can sort of find what it needs to get up above 32.50, we could be seeing quite a few bucks move, quite a few buck moves sort of like to the top side in silver. But that's getting ahead of ourselves. I mean, the here and now, you need to sort of, as I said, it's consolidating, but still finding sellers at this top level here. You could almost just, again, draw a little box around this here and say, look, wait for that break there. We know where the targets are once it goes above. If it does come down underneath, then you could maybe be looking for some buys just down back along this line, which is that falling resistance, which it had been sort of respecting for a little bit. So a dip down below sort of to around 30, say 29.80, I'd be happy to buy that up to give it another run up to the top side there as well. Flip across, got USD China, so yuan. And this is another one. So we're finally getting the break, and it's just slowly working its way down. You can see, it tried to sort of push back up a couple of times. To probably almost sort of make this little box a little bit bigger here, like it was sort of on the daily, and they were previous wicks. But you can see that obviously the market 3 times tried to hold it and sort of respect this zone through here. So that would mean that this would be your measured move, and this would probably be more your measured move to the downside here, which, as you can see, lines up pretty well with these previous lows, previous highs from going back to December 22. So remember, resistance support, it's the same thing every time. They were all sellers here. It broke through. Well, now we expect them to be buyers coming through here. And that lines up, as I said, with your same measured move. So move these ones along. This is a period over here. And this is another thing that I sort of say that's like, DXY is great because it's got a basket against the other majors, but one is kind of more like a bit of a sort of a reflection of how US dollar is going against more of the Asian sort of currencies. And obviously, in my case, in our case, we use it for against Aussie dollar. Because, a stronger yuan means, hopefully they've got a bit more money to spend. They're going to be buying more of our sort of, products, our sort of iron ore and the such. And that's obviously better for the Aussie dollar. So that's another reason that the sort of Aussie dollar could be staying elevated in the short term. I do expect to see, if we do see DXY break down, another drive down to this level here, we'd expect buying on here. These things come at the same time. So it's basically what I call a cross-chart confluence. And as we sort of see it sort of come into its sort of respected sort of zones, like whether it's supports, resistance, if you look across a bunch of the different markets at the same time, it's generally pretty much they're all coming into their supports and resistances at the same time. So this is how you can use a couple of different instruments basically to sort of confirm where the strength is with it all. But certainly at the moment we are seeing this dribble down, dribble down, dribble down. Look, even if it does get a bit of a push back up here, I reckon that 707 will offer a little bit of a sort of a selling opportunity, and then we'd be looking to move to the price target down here. But one doesn't move super fast. Generally, it's just a little bit of a grind anytime it does anything. It can obviously have these moments where it does sell down ridiculously fast. But I think at the moment it's just going to be a little bit of a grind. But 7 is the first price target, which as I said, just lines up with this range and also those previous supports that we just showed a second ago. Cool. We'll finish off. Move towards finishing off, and we've got copper. So copper, it's that breakout through that falling resistance back into the buy zone, and it has been stuffing around a couple of times, but we finally got that break of the next level. So this was the first breakout highs, back to our buy zone, retested it a number of times, and as I said, you can see the buyers are moving up their bid. And now we've broken through, consolidated out the top side of it all. We know in the little short term that this is where the sellers are. Put a little zone there. So that's the little confirmation to then sort of be moving towards price target here. I think if we do get any sort of drop down into these sort of areas over here, say 428 or so, 428 to 431, these kind of areas here, I'll be looking to add to sort of some longs as a potential back test, which then could then move up to 450 would be the sort of price target that we're looking for in the sort of in the short term. But for now, it is moving along quite nicely, just as it does. Put this on here. Not sure why this is dotted line there. Beautiful. So that gives us a little bit of an idea of where we could be looking for some pullbacks. Oh, that's not so bad. Yeah. So yeah, I think sort of any sort of dip down, yeah, buy that up, and then we'll be sort of looking for a little bit of a drive back up to 450. 450, I expect to then start to see some further sort of selling off with it all. And this goes in line, as I said again, with the idea that maybe if DXY does break down, hits those lower levels, that we're seeing one hit that lower price target, you'd see copper coming back up into its support price target, support resistance level, which is also its our price target, around the same time. So these moves are feeling a little bit exhausted, but I wouldn't be surprised if we do see a little bit more of a push before we do start to see a little bit more of a rebalancing. But I think a lot of it really just comes down to what they're going to do with DXY. All right, so that's pretty much it on the charts. Let's flip across, refresh, just have a look at the news. As I said, the big one for this week pretty much is RBA, but even in saying that, the RBA is pretty much a sort of set for a hold, I'd say. So I'm not expecting a great deal. We got PMIs all coming out tomorrow. We got Aussie. Has that been revised down a little bit here? These ones, look, they can set the tone a little bit, but really the main ones that you want to be looking for are the euro and then the US later at night. And again, these are the kind of things that you're looking for to see, how bad is the US economy? You know what I mean? How bad, yes, they did a 50 basis point cut. The rhetoric of the talk has been that they were going to be doing a 100 basis point through the end of the year. And so people were speculating that if the first one came in at 25 base point cut, that they've got two more meetings, that they'd have to be making up 75 base point to be on track with that. So, what I mean, I've heard some people say, oh, they're going to do another 50. I think it's too early to call. I mean, a lot of what they say, I mean, it's the same stuff, same talk every single time, but, it's data dependent with it all. Well, these are the starts of the little bits of data that you really need to start to pay attention to, because if these numbers come in weak, then, you're going to see more of a case be built for, wow, we need to do more. We need to do another 50 base point cut. Whereas if these numbers come in a little bit stronger, that gives the counter argument. That gives the idea that sort of like, okay, look, inflation's pretty much been beat. We're seeing sort of, the inflation's been beat. We're seeing the economic data sort of come out, not so terribly. They don't need such a helping hand. We've already cut them. Let's see how that happens and how that goes. So yeah, this will be the one that I'll be paying attention to tomorrow night. So 11:45 at night, and then sort of, as I said, cash rate. Yeah, expectation here at least is that we've got the hold. Of course, then we've got the statement. We've got the press conference as well. Yeah, there's a press conference that we do 1 hour after that, so Tuesday afternoon. Moving through with that, there we got the consumer confidence Wednesday or Tuesday night Melbourne time. For the US, another one to look for. Look, it's coming in pretty flat with it as to last time, like the expectation wise. But again, another one there. If you see weak consumer confidence, you're going to sort of see more of a case and more talk and language around the idea of, hey, we need to do more. We need to do it to sort of push up businesses and save the economy a little bit more. It's a big week for Aussie because we've got CPI coming out there, 2.8. Now, this would be interesting. It's actually sort of very close together. I mean, like day after day, the two biggest bits of data in the calendar are coming out day after day, and also the cash rate happening to sort of come the day before. So, as I said, I would pretty much expect that they're going to hold on this. 2.8 from 3.5 is a big drop off. Generally, these people that do these expectations get it wrong. But more often than not, they at least get the right direction. So if we do see this push down, if we get 2.8, Aussie's going to get crunched. If we get sort of, still up around sort of, say 3.1, anything with a three handle on it, I would say, muted response, and I don't think we're going to be going up with inflation. I think we are going to be moving and trending in that sort of downward direction. But I would say that sort of like, if we get sort of, something, if this does come in at this level here, I wouldn't want to be holding too much Aussie long, excuse me, just in the short term. Because remember, the number one driver for Aussie RBA at the moment is inflation. We're not talking about recession. That's not part of the discussion necessarily. I mean, look, it's always part of the discussion, but it's not the driver at the moment. Inflation is the driver. This is why you see people sort of making comparisons between what the Fed's doing and what the RBA is doing. There's no connection to them. I mean, look, the RBA. I mean, we had our cash rate at 4.35. They just cut 50 base point in the US, and they're still at 5%, so they're still above. Plus, their housing market is different to ours in terms of sort of like, fixed rates and variable rates and how that sort of impacts the market. So, yeah, they're two different sort of things. And so, well, they're definitely at different points. You know what I mean? They're 2.6 or whatever they are in terms of inflation. We're 3.5 currently, 3.5. So that's a fairly big drop off. And in terms of how much you see with CPI, you don't typically see as a 0.7% drop off. So I would be inclined to sort of say that this is going to be a little bit over positioned for it, and I'd be looking probably around 3.1. But if 2.8 is what people are going to be sort of expecting, well, that's is sort of put out to the market there, that's going to weigh on Aussie moving into this first part of the week, sorry. And again, this is why I think that these moves do look a little bit exhausted as to sort of where they are right now. I do think Aussie will put in a new yearly high, but I think it may sort of see some cooling off in the short term. So I'll be careful with a couple of Aussie longs or two heavier position Aussie long, apart from the core positions, sort of moving through this week. Moving forward, we've got the cash rate for Swiss francs, so they seem to be cutting. Seems to be sort of pretty much what everybody's doing at the moment, except for Aussie, which I've covered a number of times. You've got GDP for US, weaker number, only marginally, but again, if things are weaker, they're going to be more inclined to sort of say, hey, look, we need to do more. But at the same time, they only just cut. So, it's you got to give it a little bit of a time to sort of filter through to sort of see some sort of reactions. Coming through, a whole heap of Fed speakers and that just go on and on, don't they? We got CPI in Tokyo on Friday morning. So yeah, I mean, I don't really follow yen too closely in that, but obviously there's another sort of tick down. So it seems like globally, obviously the inflation's sort of coming down, but as I said, Aussie's certainly lagging just a little bit there. All right, that's it from me.